nationally. How are we doing nationally? It's a seller's market pretty much anywhere you're looking. Why do you think inventory levels are so low? The answer to that question is twofold. One is we have a lot of people who are thinking they want to sell or who had planned on selling, but they're hesitant to do so because of COVID. Zillow did a study. 31% of homeowners who were thinking they would put their house on the market have decided not to because they feel there's some financial uncertainty. 34% are just saying that life is too uncertain right now. And 25% have actually cited COVID. Personally, I think all three of those things really are COVID related because, as I said earlier, 2020 is not a normal year. Here's the thing though, in a seller's market, you put your house on the market, it's going to sell. So that's another reason that inventory is so low, because whenever something comes on the market, it sells almost immediately because there are buyers who are wanting to move. They want to get out of the city. We've talked about that a number of times over the last, 8 or 9 months. So the thing about waiting is that there's going to be a cost. Here we have another quote from Jeff Tucker at Zillow. Homeowners who feel life is uncertain right now may think they can still get a strong price if they delay selling until they have more clarity. That's true, they might. But the catch is that waiting to sell may raise the cost of a trade up. We've had record low mortgage rates. There's no guarantee that those rates are going to last. And as we've been talking about, inventory levels are pretty low, so prices are going up. So as prices go up and interest rates go up, affordability goes down. Last month, we talked about housing appreciation, and every large financial institution that is polled has stated that they believe there's going to be appreciation. Even CoreLogic, who last time I reported had said that prices may not appreciate, they might stay flat, they've even now changed their prediction, and they're saying that home prices are going to appreciate only by 0.2%. So they're still an outlier. The rest are saying that anywhere between 3.1 and 7% of appreciation is what we're going to see in the next year. So there may be, you might get more for your house if you wait, but where are you going to go? So if you have to buy something, prices are going up on what you're going to buy too. So there's a cost to waiting. The other part of that are interest rates. Predictions for rising interest rates are anywhere. So if we're going all the way out to 2023. Anyway, so right now in 2019, we saw 3.7%. And in 2020, we've hit a low 3%. And in the next 3 years, they are going to rise, but just a little bit, 3.3, 3.6. And then by 2023, we're going to see 3.9% interest rates. It's kind of silly to think that that's high because, it's really not. But it is going to be higher than the last couple of years. So with prices going up and interest rates going up, housing affordability also goes down. But the news stories often describe the coronavirus-induced global economic downturn as the worst since the Great Depression. Yet for many, that comparison does more to terrify than to clarify. There are too many things happening in our economy and in our housing market that are keeping it strong. We are not going to have a foreclosure crisis like we did in the Great Depression. Chances of that are a big fat zero. And that's because people have more options now than they did then. And people have equity in their homes, as I've told you over and over again in the last 6 or 8 months that we've been talking about this. Interest rates are still low. People took their stimulus checks and they didn't just fiddle them away. They paid down their debt. They saved the money. Only 30% of people who got a stimulus check actually spent it. I don't know where those numbers come from, the Fed, but I don't know how they figure it out. But I will say that if you look at that and you apply that to the big picture, people have equity in their homes. People have savings. People are getting their jobs back. All of these things point to the continuation of a pretty strong housing market.